For scenario 1, there is a payment to a foreign contractor for a construction project in Malaysia amounting to 500,000. This scenario applies to Section 107A of Income Tax Act 1967. The tax rate would be a 10% plus a 3%. In this scenario, the payment is to a non-resident contractor for a construction project in Malaysia for an office building, so it is subject to the withholding tax. We need to deduct 10% for the contractor's liability and also an additional 3% if there is any non-resident employees are involved. We will calculate based on a full 500,000 as it is wholly for the Malaysian source construction services. Then we have to remit it to the IRB within 1 month of payment using the form CP37 or CP37C. As there is a withholding tax rate of 10% plus 3%, so the withholding amount will be 13% times the 500,000 of the withholding tax base, and we will get the withholding amount of 65,000. For scenario 2, the payment totaling of 300,000 for architect provided by a non-resident company covers 15 days in Malaysia and another 15 days outside of Malaysia. This scenario applies to Section 4A2 and also Section 109B of the Income Tax Act 1967. The withholding tax rate will be 10%. In this scenario, the payment is made to a non-resident company for a professional architectural services, so it will be subject to the withholding tax. But we only have to calculate the Malaysia source portion because only 15 days of the services are performed in Malaysia and the another 15 days are performed outside of Malaysia. So we will calculate the Malaysia source portion by times the 300,000 with the 15 over 30 days, and we will get the 150,000, which is the Malaysia source portion, and only this portion would be subject to the withholding tax. Then we will deduct the withholding tax of 10% on this portion. After that, we will remit it to IRB within 1 month of payment using the form CP37D. For the calculation, we have to separate the Malaysia source portion and the non-Malaysia source portion first, which is the 150,000 each. Then we will times the 10% with the Malaysia source portion of the 150,000, and we will get a withholding amount of 15,000.
For scenario 3, the company makes a payment of 100,000 ringgit for advertisement on Facebook. This payment can fall under Section 109 if it is considered royalty for using the platform, or under Section 109B if it is treated as special class of income for managed advertisement services. Either way, the law requires the company to deduct 10% withholding tax since the payment is deemed Malaysian source. The deducted amount must then be remitted to the Inland Revenue Board within 1 month using form CP37 for royalty income or CP37D for special class of income. Therefore, 10% of 100,000 ringgit, which is 10,000 ringgit, must be withheld. For scenario 4, the business pays 200,000 ringgit to a foreign company to hire an aircraft. Even if the aircraft is used outside Malaysia, the payment is still considered Malaysian source under Section 4, capital A, subsection 2. This makes it subject to Section 109B with 10% withholding tax deducted on the full amount. The company then needs to remit the tax within 1 month of payment using form CP37D. In this case, 10% of 200,000 ringgit, which is 20,000 ringgit, must be withheld.
I will share why reminding withholding tax on the separated time forms to the Inland Revenue Board is important. Firstly, it fulfills legal obligations. The provisions of the Income Tax Act 1967 clearly stated that the taxpayer must pay tax on time. Failure to do so can result in a 10% penalty. This will increase company financial burdens. On the contrary, taxpayer can avoid legal risk and refer law-abiding behavior if timely payments. Secondly, it is a part of social responsibility. Withholding tax is a key revenue source for the governments. Timely payments ensure smooth financial operations for national development. Delay may cause imbalance or unfairness amongst taxpayers. Lastly, it helps maintain company reputations. Considers late payments may rise double about a company's financial health, rise blacklisting by the IRB, enhance relationships with banks, partners, and government authorities. In conclusion, payment withholding tax on time is not only a legal duty, but also is a social responsibility and a way to protect companies' reputations. Thank you.
In order to guarantee the compliance of regulations on technical services provided outside Malaysia, ABC Sdn Bhd needs to take 3 key actions. Firstly, in the case where the non-resident service provider's home country has a double taxation agreement DTA with Malaysia, ABC may first consult the stipulations of the related treaties to determine whether the withholding taxes will be tax exempt or charged at a lower tax rate. There are several countries that Malaysia has DTAs with, and this could lower or eliminate withholding taxes in some forms of income. Next, to enjoy the benefits facilities of DTAs, ABC should ensure that service providers have a valid certificate of tax residence provided by their respective tax authorities. The non-provision of this certificate will lead to imposition of the standard domestic tax rate.
In addition, ABC Sdn Bhd need to properly record the nature, extent, and the exact locations of where the service will actually perform. This means that they're required to keep in the supporting document, such as the contract, the invoice, the certificate of tax residence, to prove their compliance status during the audit process. Another part is they should also maintain a technical report with a proper timestamp and IP address that show the offshore activity, such as a detailed version of work schedule, the passport stamp of their staff, which can help her to clearly demonstrate which portions of the work was performed within Malaysia and which portions of job were performed abroad. Why is it important? According to Section 109B of the Income Tax Act, only the part of the fee that linked to service in Malaysia is subject to withholding tax, which means that offshore portion may be exempted if the records are clear and well prepared.
The failure to comply with the withholding tax in Malaysia carry the 3 major implications. First, the legal implication. Under Income Tax Act 1967, if ABC does not withhold or remit the tax on time, the Inland Revenue Board can impose the 10% penalty on the unpaid amount. Besides, the false reporting may trigger the additional penalty under Section 113(2). Second, the financial impact. If ABC fails to pay withholding tax, the expenses will not be deductible by the IRB, which may lead to a higher taxable income and greater tax liability. Penalty of late payments such as 10,000 ringgits of the penalty on the 100,000 ringgits of the withholding tax payment, which also can significantly increase the cost and strain the cash flow. Lastly, the reputational damage. Non-compliance signals the weak governance of company to regulators and the investor. Tax governance is now central to the reputation management. The weak governance could reduce the investor confidence and even block the ABC from securing contract or financing. So in conclusion, withholding tax compliance is just not about to avoiding the penalty. It's a strategy necessary to protect the ABC from the legal standing, finance, and the reputations.